what are the most successful participants doing? Those who have been in this market for 20 years, for 12 years, for 10 years, what are they doing? What is the secret to their success? And you see, this actually is the biggest question you should ask, because if you've not found an answer to this question, you are still far away from consistent profit. Are you with me? So what exactly are the most successful participants doing? I'm going to answer that question in 3 ways. All right. The first thing is, remember I said you trade with your class. All right. So if you are a retail trader, you can learn from what the most successful retail traders are doing. That will be your point 1. 2, you can learn what are the most successful commercial banks, how are they trading, and learn from that. Then 3, you can also observe what's the system, what's the strategy, what's the ideology behind how the most successful hedge funds and investment houses, what is the secret behind their success. All right, you learn from that, and then you can then sit down as a retail trader and say, how do I manage all of these things? How do I bring all of these things together to create a fantastic meal that can guarantee me profit every single time I'm in the market? Do you get it now? So we're going to start from the secret of the hedge funds. And please, guys, I want you to be very, very, I want you to be very calm and follow me. All right? I don't want you to rush. We're still going to have a question and answer session. All right? But I want us to be very, very calculated about this. So we're going to start with the hedge funds. What is the secret behind the success of the hedge funds? Number 1 secret is that the hedge funds have large capital. Did you get that? So the number 1 secret of the success of hedge funds is that they have large volume of capital, big money. All right, such that even if they take a position by mistake, all right, if there are no other hedge funds or commercial banks in the market is definitely going to go their way. Definitely. All they just need is to find a point in time where the volume is very low and then inject their own volume into the market. All right. So hedge funds, one of the advantages they have is large capital. Let me write that on the screen. All right. 1, we have large capital. Then 2, most of the biggest hedge funds in the world, talking about hedge funds like BlackRock, talking about, all these hedge funds that have equity worth trillions of dollars. All right, I have equity worth trillions of dollars. What is particular? What is special about what these guys have? The second thing that they have that you may not be able to have, all right, is that they have algorithms. Are you with me? They have what? They have algorithms. And these algorithms are strategic things. Aside large capital, all right, these hedge funds have what I call algorithms. I know right now somebody is saying, I want that too. So this guy just wants to come and sell us indicators or robots. All right. I know somebody saying, so that's why we are even here. They want to sell us robots. No, I'm not on this call to sell you a robot at all. All right. We are going to look at what you can learn from the fact that hedge funds use algorithms. We're still going to look into that. All right. We have 1 hour to ourselves. So enjoy. All right. Enjoy. Don't be in a hurry. Do you get it? Don't be in a hurry. Don't be in a rush. We're going to do all of these things and check it. Are you with me now? So, hedge funds also have algorithms, trading algorithms. Now, you as a retail trader looking for an algo that you can buy for $300, $500, $1,000 that will make you as profitable as the hedge funds, permit me to inform you, you are joking. Let that sink. If you as a retail trader, all right, if you are planning to buy a robot or an algorithm that will give you the kind of profits that hedge funds are getting, and permit me to inform you now, if you didn't know before, you are what? Joking. Are you with me now? So understanding that brings us to realize that these hedge funds, their algos are not commercial. They don't sell their systems. All right. So the reason why they don't sell their systems is because their systems are created out of many years of research. All right. If BlackRock, for example, I once did a study on their trading system, and I discovered that they have an entire department of people who are not programmers. They are statisticians and mathematicians. All right. About 12 or 10 of them, whose only job, they come to work every morning, all right, and their only job is to find a pattern in the price action for 1 month. All right, they find a pattern and find a formula for arriving at that pattern, a formula for calculating that pattern. All right, it is now based on the result of their calculations that they present to the development team, who will then create a robot based on the outcome of their research. Are you with me now? Who will then create the algorithm based on the outcome of their research. So it's more like every new month there is something that they are updating about their algorithms. Every month there's something they are updating. All right, because you cannot say that the way the market has been last year is the way it is going to be this year. You cannot expect that the same things are going to happen or repeat themselves again. Do you get it now? So that is number 2 that hedge funds have as an advantage. Then number 3 that hedge funds have as an advantage is that hedge funds are protected by a legal structure. With me, hedge funds are what? They are protected by a legal structure. And because of that structure is why hedge funds do not trade under pressure. Are you hearing me now? Hedge funds do not trade under pressure because they have a backing of the law. Are you with me? If we make profits, you guys get paid. If we make losses, you guys also you bear part of the burdens of the loss. Are you with me? So hedge funds have that. Are you with me now? So the most successful hedge funds, this is part of what they have. Are you with me? Then let's now go to the most successful banks. Now, the number 1 thing that the most successful banks also have, all right, is also large capital. And that's why when I see a trader who is saying, sir, I have $50, I want to make $5,000 before the end of the month or next month, I just know that this person is already on the verge of losing completely. Are you with me? Am I saying it is not possible to flip money from like $50 to $5,000 in a day, in 2 days? Am I saying it's not possible? No, it is absolutely possible. However, you must know that those who are doing that are not doing it under pressure. It's like I have $5,000 in my portfolio and then I only put $50 on this particular opportunity that I have seen. All right. And I'm going full margin on that $50. Are you with me? I go full margin on that $50, meaning I am not under pressure. If I lose that $50, it is less than 2% of what I have as my total asset. Are you with me now? So I can risk that entire $50. Unlike somebody who all the equity they have, don't let me say in heaven and on earth, but all the equity they have is that $50. And then that person wants to, become a flipper, learn how to flip and be flipping that $50 to $5,000. That person is most likely going to blow that money and lose out. Do you get it now? Are you with me? So that is number 1, large capital. Then the number two thing that the commercial banks have is that commercial banks have branches. Now, let me explain. When I say that the commercial banks have branches and it is part of the leverage that they have, what I'm simply saying is that a commercial bank that has a branch in the US, that has a branch in Tokyo, that has a branch in Sydney, that has a branch in London, are you with me? That bank, that commercial bank, is still going to be doing well, if dollar is dropping and JPY is rising. It simply means that it is their US branch that is probably in a drawdown. Are you following me? Their branch in Tokyo is making profit. So what one branch is losing, another is what another branch is possessing in profit. Are you with me? GU is rising. It means that GU is stronger than USD. So their branch in London is making more profit, all right, while their branch in the US may not even be trading at that point in time. Are you with me? So the presence or the possession of several branches gives them a leverage in order to be able to hedge their risk. Are you with me now? They are able to hedge their risk because they have branches in all of this, economic capitals, in all of these financial capitals. Are you with me? You do not have branches as a retail trader. So it's important that you're smart about it. We are still going to look at what you have as a retail trader that is your own advantage. All right? That is your own advantage. So banks have large capital as their advantage. They have branches as an advantage. Then the third advantage that banks have is that they have specialized traders. All right. These banks have specialized tools and traders. One of them was the Commitment of Traders report that I talked about. All right. And they have very professional traders because, I've worked closely with somebody who actually, is the chairman of the board of directors for a BDC. All right. And this person has fantastic knowledge of how it works. Are you with me? And they have strategy meetings almost every Monday. So banks, one of the advantages that the commercial banks have over you is that they have professional traders, specialized traders and tools.